Hello and welcome to another update video about the NASDAQ. I just want to give you a quick update about the NASDAQ E-mini futures. We are going to take a look here at the short-term structure from the January lows, the 5th of January low. We have had quite a bullish perspective over recent weeks. Two of our support areas did hold here, basically trading areas, you could call them, or trend reversal areas. The market reacted to both of these most recently. We had a 5-wave rally from the 5th of January low here into the 11th of January high. That is what we call the wave 1, then a wave 2 pullback, and we highlighted here, as long as our pivot is holding our support zone, we should see a 3rd wave rally. Yeah, I gave you some targets. In the last video, I complained a bit that this was a little bit short for a 3rd wave, but acceptable. But I think we've now got the 3rd wave top in place here. This also aligns much better with Fibonacci guidelines. Let me explain that. So if I measure the fibs from the low of the 5th of January to the 11th of January high, and we go to the low of that wave 2, it basically reached the area between the 1.38 to 1.618 extension. That's ideal. I think the last in the last video we had it here, but I mentioned it could only be potentially a sub wave of that, right? So I think I'm much more happy with this, calling this a 3rd wave, this now the 4th wave. That knowledge now gives us the support levels that we need. Let me just adjust something. So basically it gives us the relevant pivot support area that we now need to hold for trend continuation higher. So let me just check something. What we normally do, we take the length of the 3rd wave, okay, and we're looking for the 23.6 Fibonacci retracement to the 50% retracement. And again, I measure the length of the 3rd wave, which can be called a 5-wave move. The 3rd wave has a good length, and the low of the wave 2 was down here. Let me zoom in a little bit. The low of the wave 2 was down here at the 50% Fibonacci level of the wave 1 at the time. So again, it's respecting the Fibonacci levels. So I take the length of that. Oops, just need to select that tool again. Take the length of that 3rd wave. And we are looking for wave 4 support. And I make that a bit smaller. Adjusting it briefly here. So yeah, and that is sort of what I'd like to see as support. Well, that is support. They are basically the levels that tell me when something on the chart is changing. In addition to that, I would like to keep on the chart the 78.6 extension. That acts as additional support, whereas actually I don't need it because well, I'll leave it on there actually, because there could be some levels to watch actually. So let's take these out. Okay, and then this is our support zone, which will be relevant probably next week. So my view is, as long as we're holding 17,235, we should be able to look higher. This here could form a potential head and shoulders pattern, yes. But again, there is still space in the support area. What I can highlight is that a break below 17,235 will mean that this uptrend is certainly not impulsive anymore. It might turn into a diagonal pattern. If it's a diagonal, it certainly will become far less reliable and very questionable. In that case, we can add the 17,107 level. But below that level, I haven't got anything clearly bullish left. To be honest, we would struggle. We might see that then as already a complete 5-wave move, even though it would be very shallow. Maybe it would be a high B wave. Okay, and this previous scenario, which would allow for a deeper pullback, could still be relevant, all right? Remember that we were also looking at the alternative scenario for a B wave deeper pullback. In this case, yep, this A wave really topped here. This was then a smaller A. This is a B. Overshooting B wave, and we break down and see. If anybody's looking for a bearish alternative, certainly I'd say if we break below 17,235 next week, we would at least test the maybe the last week's lows basically first, but then there's a good chance we come down in the C wave. So that would be my, let's say, short-term bearish alternative. It would probably still be bullish. It depends on the structure is coming down, but I would like to see it then hold this larger support area. But we're not even close. So let's see. My interpretation at the moment is that there's a good chance for a continuation higher. Obviously, this is now the area that we need to observe for potential reactions. The S&P 500 also shows some bullishness. Okay, it's also possibly now in a pullback. And I think next week we might go a little lower on the S&P, possibly here on the NASDAQ as well. But yeah, I mean, overall, we still have a chance to move higher as long as we are above the support area. Now, I can't promise you support will hold. That would be ridiculous to suggest that. But it's to understand, okay, do we have a, let's say, a reliable structure? I think we have. This looks impulsive, but it's worth observing the 50% Fibonacci level, because if it breaks, it tells us that something different is going on. Yeah. And then the fifth wave should take us higher once we find support. We can also use the Fibonacci extensions actually to calculate targets for that fifth wave. And I'd be looking at the area probably around 17,900 as a minimum for that fifth wave. Better would be 18,030 or 18,200 as wave 5 of 3. Then we could still get another 4-5 section afterwards. That's pretty much in line with my update roughly about the S&P 500. Of course, the levels are different. The overall structure is a little different. But yeah, that's my update about the NASDAQ. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.